WatchCharts is the world's leading secondary watch market research platform. Dive into the data yourself at WatchCharts.com. Did you know that prices for watches on the secondary market are still falling? That's right. We've seen new 52-week lows for our market indexes for each of the big three brands on the secondary market: Rolex, Patek Philippe, and Audemars Piguet. Additionally, our overall market index is also at a 52-week low. Things were looking up shortly after Watches and Wonders, so what changed? In this video, we'll examine the short-term trends and offer some thoughts on where the market is headed. Let's start with the Rolex market index over the last 3 years so you can get a sense of what the broader context for this discussion and this market update looks like. And you can always, for quick reference, look this up for yourself at rolexmarketindex.com. So in December 2022, when we published a market update, we had referenced that Rolex prices were at an 18-month low. And now, 6 months later, or about 6 months later, they're actually at a 2-year low. While the 3-year and the 5-year trends are still positive, the index is now at a level that has not been seen since July 2021. So it's down over the last month, over the last 3 months, over the last 6 months, and the last year. For a time in April, it appeared as if the market might be experiencing an upswing. The trend line shows a little hump right at the end, starting sometime in late March, but that hump ends with the index today being at its lowest level in 2 years. So let's zoom in on just the last 6 months to see that trend a bit more clearly. Again, this is just the Rolex market index over the last 6 months. Here we see the index losing 1.9% in just the last month. But of course, there was a sudden increase in the index value, resulting in a more precipitous drop over just the last month. For brands with index values over 1,000, this is actually the second worst performance of the last month, behind only AP, which is down about 2.6% in the same time period to Rolex's 1.9% as shown here. And it's pretty broad-based. So if you look at a breakdown of the model families within the Rolex lineup and see which ones over the last 6 months have trended up or down, we'll see actually that for most of the model families, certainly for the professional models, the ones that have the greatest transaction value, each one of those has trended down over the last 6 months to varying degrees. In a video we did about a couple of months ago referencing the post Watches and Wonders upswing in some Rolex watch values, we had specifically focused on a bunch of discontinued references. So I'm reproducing that view here just for reference and to sort of show you how that market has developed. And what you'll see is that for the 2 Daytona references that do feature in the market index for Rolex, both of those are down over the last month. The white gold 116509 is actually down over the last 3 months and the last 6 months as well, whereas the 116508, the green dial version of which is famous as the John Mayer Daytona, is slightly up over the last 6 months, but saw a huge spike in its value over the 3-month time range. So that essentially was a lot of that speculation around Watches and Wonders. The Milgauss and the Cellini are not traded enough, in fact, to be in the top 30 watches by Rolex, and therefore, they don't feature in the index. But what else is down in the index that contributed to the index's drop? Well, one of the watches that we can also mention is the 116506 Platona, which is actually the worst performing reference in the Rolex index, losing 6.6% in just the last month and 25% in the last year. As always, you can check out the full list of watches that make up the index at rolexmarketindex.com. And we'll spend just a quick moment looking at the John Mayer version of the 116508, which is the green dial specifically, that shows this trend of discontinuation causing hype in the market in an even more pronounced fashion. So there's this huge sort of speculation in prices that results in an upswing, and then prices have since then started to come back down. Again, this view is just showing you 6 months, but over the longer term, of course, this watch has still lost 12.9% of its value over the last year. And so if we zoom out a little bit beyond just Rolex, This is the exact view we showed you when we said that there might be signs of a recovery in the Rolex market. This exact slide, it was used in a video that we published in late April. The chart snapshot itself is from sometime in the third week of April, when there was positive movement in the prices for, these highly sought after Rolex references that were getting this, that were either that people either knew had been discontinued, or there was speculation that they would get discontinued at Watches and Wonders. But this is the view as of April 25. What we'll see is obviously what we've seen for Rolex is the rest of the trend up till present day does not look great. But before I move on to that, just quickly on this chart, again, a note as a reminder, this chart shows us the comparative change in percentage terms in the value of the brand and overall market indexes over the past 3 years. So the Patek index, for example, is up about 95% over the last 3 years, whereas the Rolex index is up about 40%. This lets us see quickly the relative changes in the indexes and compare them. And so you see 4 indexes plotted on one chart here. So again, this is what we showed you on April 25. And then 2 months later, the rest of the chart, which is beyond the dotted line, you see how the decline is not just visible in the index for Rolex, but also for AP and Patek, and then of course the overall market index as well. Collectively, this means that each of the big 3 indexes, as well as the overall index, have now fallen to new 52-week lows. So essentially, this is the lowest they've been in the last year, and they haven't been this low in the past 24 months, or about 2 years. So let's just zoom in again on that comparison chart and show you what that view looks like for the last 6 months. Again, the dotted line is roughly where we were when we published the last market update a couple of months ago. And then since then, you can see that the overall market index, the Rolex index, the Patek index, and the AP index have all fallen. So what we've essentially demonstrated so far is that the market is in decline, that long-term trend is sort of continuing to stay in a downward direction. And in that sense, the news is not necessarily that different, perhaps, from everything else that we've been seeing over the last year. Maybe the pace of decline has slowed down. Previously, the market was dropping much more quickly, but it's still falling. And so if you want to look for bright spots, actually one bright spot that we can point to is our price range index for watches that cost between $1,000 and $2,000 on the secondary market. This is a price range that over the last year saw a little bit of the same trend that the broader market saw, where there was a correction in the first half of 2022. The market bottomed out for this price range specifically, and then since then has been on an upward trajectory. This index is primarily made up of discontinued references from mid-level brands like Omega. So there's several Speedmasters in here. There's a watch there's one reference in there by Breitling, another one by Cartier, a few tags. And so by and large, if you leave the tags aside for a second, these are watches that on the primary market would have retailed for a $3,000 plus price point. And so on the secondary market, when they're discounted, this is generally the price range they end up trading in. And so that's what makes up the index. But the bright spot is not really a spot as much as it is a silver lining. And maybe that's the metaphor that I should have used, because if you add up the total annual transaction value that this index accounts for, it's less than 3% of the total annual transaction value for Rolex alone, which is in the billions of dollars. And so it's not as simple as saying, oh, here's a positive sign of how the market is developing. It's actually quite a tiny portion of the market by transaction value that's experiencing this gain. So that's sort of a quick update on where the market is. And I think in the coming days and weeks and months, what we're going to find is that the fundamentals of why these trends are occurring and why these declines are happening, the buildup of inventory in the market, economic uncertainty, anxieties about global economic growth and security, all of those things are feeding into the impacts that we are seeing on the watch market. And so as long as those things continue to be the case, there's very little that would suggest that these trends will change in any way. But if you disagree or if you have other thoughts to add, let us know in the comments below. We hope you found this interesting and insightful. Thanks for listening.